Hey everybody, this is Sean with Not Financial Advice. It's June 3rd after the market close, and in today's video we're going to be talking about the $500 of stock buys that I've recently made into the market, which companies and why. We're going to dive into all of that and more right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
So, if you've been following the channel, what you may know is I have not been actively working for about 7+ months. Uh, I have not made a video in the last 2 weeks because in the last 2 weeks I have attained active employment once again, and that's where these funds to invest into the market have come from. Although it's been a slightly difficult time, easier on me than many others because I'm blessed and privileged. What I would say is, I had worked and contributed pretty heavily into the stock market, and it was pretty convenient because as soon as I was done contributing, um, and I was done with active work for a spell, the market went on to have one of the top 10 runs in the history of America. And I made $15,200 sitting on my butt. In this time, I also received probably about five, six or so $100 worth of dividends that I reinvested as smartly as I could. But in more recent times, my portfolio has just essentially consolidated for about 2.5 months. And so, is that a bad thing? No, not at all. Um, am I disappointed, discouraged? Am I going to give up? Farthest thing from it. So in the last 6 months, I'm up 20.1%, beating the market by about 4.5%, which is up that amount. And although this only tracks back about 6.5, 7.5 months, we can say I'm beating the market year to date as well as over the last 6 months. And although this only tracks back, 7 or so months, I'm up 23.9% over the last 7 months, but this is showing the returns of the US stock market over the last 12. So I'm handily beating the S&P 500, and now I'm back with some active employment to look for some active continued outperformance. Today, the market was up about 0.11%. My portfolio was up about 0.9%, good for about $67. And talking about some of the buys that I've made, let's go through here. You'll be able to see what my positions did on the day. Here's the 5 that were up today. Pair of Vertex Pharmaceuticals, Domino's Pizza, Best Buy, which was upgraded because people think that people are going to buy AI-enabled devices, and then Green Thumb Industries. The stocks that did poorly today were Scott's Miracle Grow, Trulieve, Mexican Coke, Waste Management, and Solventum Corp. So there are, I would say, 4 securities that equaled the $500 of buys that I've done here just in the last 2 weeks or so. And so first and foremost, as soon as I see it, I want to discuss my buy that I did just today actually into Airbnb. So I put about another $92, $93 into Airbnb, and it rose 1% today, making me $3 on the day. So for Airbnb, I think that's like investing in Disney in 1970. The company has rapidly it's profitable and it's improving in profitability and dominance rapidly, I believe. Other companies that I've made some investments in over the last 2 weeks specifically, this will be the biggest area of investment. So the Vanguard Total World Stock Market. So like 11,000 stocks, market cap weighted. It's about 65% US stocks, 35% international stocks. And so this is the what if I'm wrong? I did 2 about $93 buys. I've owned this through a combination of VTI and VXUS. I already own this, but this is a new way in which I'm buying, sort of a boglehead philosophy. So I did those 2, near $100 buys into that. But along with Airbnb, I've also made contributions into Salesforce. Salesforce I've made contributions into. I just did about another $93 buy today. My whole position is there. Made $11 on the position today. But this is down 25% from all time. So I added there as well. And then I would say, lastly, a company that I've been buying has been Ulta Beauty. And so here's the hot take, from my seat, from my perspective. People don't like investing in retail, but that's my edge because I'm just a regular person like you. And I know that women will buy makeup, heck or high water. Um, they're going to want to try it on their hand, but they can also buy it online. So Amazon's my biggest position. I also own Ulta Beauty. And any retailer I own will have strong online multi-channel, which Ulta Beauty does, but also a loyalty or rewards program. 95% of their customers are on their app. Um, and the brand is sticky because of the app, because of multi-channel. And this one's been down for no reason. So I added about another $93 there. So those are my four buys that I've done here recently in the last couple weeks. And over the 6 month period here, had a lot of gains, having some consolidation. Um, Consolidation often will lead to markets moving higher or lower, or choppy, but I don't care. I guess I'm going to skip right over here to the end and keep this video short and sweet. $500 I invested. A portion of it was in the total world market, but I think companies like Ulta Beauty, Airbnb, companies like Salesforce, I think those companies can outperform. Historically, the market will give you about 7%, but I've invested $500 in the last couple weeks. Some of the companies have a dividend, others don't. So if I say $500 initial investment, a 1% dividend, or rather a 5% dividend, $5 dividend, which would be a 1% dividend, over 20 years growing at 10%. I've just turned $500 into $4,000. Account for inflation, $2,000, 4xing my money over the next 20 years. If I could only be so lucky, that my portfolio had the same returns. Let's just say I'm just sort of doing rough numbers here, but I'm keeping my eye on the prize for the long game. So, um, and that wouldn't be dividends. Let's just do that. So, have a couple $100,000 inflation adjusted in 20 years. It's time to work harder. I'm doing that here on YouTube, doing that in my personal life and at my new position. And I just want to thank you so much for being with me on this journey. I'm Sean, not financial advice. See you on the next one.